Let's take a look at some information and charts on Compound for Brave New Coin. So Compound.finance is a simple lending and borrowing platform in the category with Maker and Aave. So the important things to watch for any lending and borrowing platform: what can be provided as collateral, what is the total borrow amount, what is the total supply, what are the APYs, have there been any big liquidations recently, are there any issues with the liquidation engine or the collateral, right? It's a loan platform, so this is the stuff that's important. If we look at what you can provide here, they have, I think it's 10 to 15 markets basically, and we break it down based on supply. It's mostly stablecoins with ETH and BTC at the top, which is typically what you see. Ideally, the loans are multi-collateral so that a single volatility spike in, let's say, uni isn't going to destroy all of the uni loans at once, right? Because then you have this liquidation cascade. And if it's effectively, it's a massive long squeeze all at once, right? We saw this on the 18th, where all of DeFi just got liquidated bigly all at once. And it's always a continuous problem because people are levered on products using Compound, or levered through products like Compound, Aave, Maker. That'll never not be a problem. It will always be there, so long as we have single collateral loans, or so long as most of these loans have a volatility risk associated with them. Now, as we get more stablecoin exposure, the loans become more stable, obviously, because there's no volatility risk, but then we risk running into the conversation of, is this even DeFi if most of this stuff is just backed by centralized stablecoins, right? You could argue, yes, it's still DeFi because you don't need a credit check or anything like that to access these markets, even though the underlying collateral for a lot of this stuff is mostly USDC or Tether. You can still supply a variety of different tokens and currencies for those loans. So that's my first rant on DeFi centralization. The second rant is in regards to TVL, which I don't know where to look. I don't know what to look at this point. Compound tells me that there's 10 billion in supply, 4.1 billion in borrow, and then 3 other websites to give me all different information. TVL is kind of a garbage metric anyway, but at the very least it helps give sentiment. And as far as who's using which protocol, it sort of illuminates the incentives for those protocols, the APYs. If the APYs spike on the supply side, there's typically an increase in TVL to capture that. Some of that's automated through Yearn, some of that is just people watching these APYs, so that'll affect TVL. If people get liquidated, that'll affect TVL. If price goes down for the underlying collateral, that'll affect TVL, right? So in general, you want to see TVL increasing across the board. I think a new metric we need is percentage of TVL with volatility risk. So percentage of collateral not backed by stablecoins. I think that'll show the risk of liquidations in the future, but always something to watch. So supply volume and borrow volume over the past 24 hours have both declined according to Compound's website. I'll get to some of the TVL metrics in a second, but they also have a governance component, of course, because why wouldn't they? Anything that has a token these days has a governance component, which is fine. I don't know if it's enough for regulators to turn a blind eye and say, yeah, there's a valid use case here. That makes sense. That's one issue with these governance tokens. Are they worth anything? Does anybody care? If price goes down, what is even worth governing? You know, those are the questions people are thinking about now when these aren't necessarily productive assets, or the productive assets conversation intermingles with prior conversations like master nodes where there's a staking component, you'll be fine, kind of, but not really. So Comp does have revenue attached to the token. I'll get to that as well. The second issue with these governance tokens is most of them are voted on by venture capital or early investors, which is fine, but it's not exactly necessarily representative of most of the people using the lending and borrowing aspects. The richers win again, right? It's like an aristocracy, sort of, in that the wealthy landowners, you know, they get the vote, everyone else doesn't, but it makes sense. They're risking capital here to hold the token, so they get the votes. So according to DeBank, gross TVL is at 6.4 billion, down considerably post May 18th, post May 12th. Borrow volumes down considerably. Liquidation volume slowly creeping up. Today, big spike in liquidations. On the 18th at 130 million, with some aftershocks after that on the 22nd at 58 million. And all of this is going to be felt for each of those underlying collaterals price-wise, because it just adds to the selling pressure as those liquidations take place. So unless the borrowers provide additional collateral, hopefully in time, those liquidations happen. Borrow volume's kind of stale, meaning there's probably very little risk on appetite at the moment. And that's across the board with all of the borrowing and lending products. DeFi Pulse has TVL at 5.7. I don't know who to trust. Compound on DeFi Llama is at 5.79. As this stuff goes multi-chain, it's going to be harder to keep track of all this stuff. So it's almost like you have to calculate it all yourself, because I don't know what all of these websites are necessarily looking at. But I'm sure a leader will eventually emerge. Here's borrowing volumes on DeBank for Aave, Compound, and Maker. And according to DeBank, these borrowing volumes are about equal, with Aave leading. But you're not seeing a massive spike on any of these, really. Maybe on Aave you saw a big recovery, but there isn't, there isn't a lot of reasons to be levered up right now with prices falling. Now, if we look at Dune Analytics, it looks like there was a big 850 million redemption of some kind, but I don't see that on anywhere else. So again, I don't know what data to even trust at this point. In general, market share for Compound is about equal to the others, even though it looks like it's shrinking recently. So I don't know if there was a big on-chain liquidation today or a redemption or something, but according to Dune, borrow volumes are down more significantly than even Compound's website's reporting, so I'm guessing that this Dune data isn't correct. Something else we can look at is market cap versus annualized revenue, or a type of PE ratio. The PE ratio purists will then further dissect the difference between protocol revenue and supply side revenue. So the percentage of revenue that's baked into the protocol versus the revenue that's collected based on volume of the exchange or the protocol, for example. So something like Maker, it's all protocol based. So the PE purists will say that Maker has the only true PE ratio, because it's not necessarily supply side. There's a burning mechanic involved there. And you can look at, what do the dexes look like, right, on this ratio. Sushi looks like it's a better buy than Curve. Uni, but that hasn't really helped anything. Compound has the best 30-day rolling ratio over Aave and Maker, although I don't really know if necessarily that's helped Compound here, right? A falling market cap will help this ratio go lower if revenues continue to increase, right? If you increase the denominator versus the numerator, and this tries to seek out relative value, but at the end of the day, it doesn't look like it's really mattering at this point in time. So there is some productive asset component to Compound and all of these protocols here. At the end of the day, we're still figuring out if any of this stuff means anything as far as buy and sell signals. Looking at on-chain metrics, transaction counts in the line graph continue to decline. Not bullish for anything. Average transaction value is declining significantly. So it looks like there was a lot of activity on the 14th through 18th, and that's dropped off. So my guess is a lot of people soured on comp, which is good. To me, this looks like some sort of capitulation movement of a big holder. You kind of see that across the board with a lot of this DeFi stuff. Maybe this is just Alameda moving stuff around, but average transaction value is way down, basically to almost yearly lows. And I would need to see transaction counts swing up again in order to get slightly more bullish, even though you're not really moving around governance tokens for any other reason than speculation most of the time. NVT is basically flat, ranging, no real changes there. And active addresses down pretty considerably from November. Some of this was probably Coinbase listing related, but again, just like transaction values, you don't want active addresses declining if you're bullish. Looking at some technicals here, 5200 EMAs, VPVR, monthly pivots, volume, and RSI. We were working on a bullish divergence on RSI that got canceled with that big lower low spike. Ultimately, I think all of DeFi is going to retrace to its yearly open, at least spike down there. There's a monthly pivot there. There's a ton of volume support there. That's about 150. So I think dip buys, knife buys start to happen around that level. But we're just now getting the death cross on comp. It hasn't been through a bear market yet. It's new, right? Like we're still figuring out what this stuff's even worth. Everything lifted off in January, so it's hard to say like any of this stuff's gonna hold its value over time when it was all just a giant bubble situation. On the daily cloud, we're far below the TK cross even, or the TK lines with the bearish TK cross. This is another way to show this is massively oversold, super quick. One way to cheat this for a reversal trade is to watch it on some lower time frame, 4 hour, 6 hour, 8 hour, where we're clearly below that cloud the entire time, and you're just waiting for a cross back above the cloud. This may not happen till we're at 150, I don't know, but that's why you watch this. It's dynamic support resist. That way you don't have to necessarily, you know it's oversold because the daily's telling you so. It's super far below the means, way below the Tenkin, right? This is just incredibly fast. So you know that, and you can just watch the 6 hour for a reversal. The comp BTC chart is maybe the most random walk turtle soup thing I've seen in a long time. It did have shades of inverted head and shoulders, whatever, it just looks like an amalgam of something. I don't know. It's a mess. I don't really think it's tradable. It's ranging. End of story. There's really not much else to say. It's bearish. 5200 cross is bearish. Below S1 monthly pivot, the last remaining big VPVR support is basically right at price right now. And if that doesn't hold, it's going to 004. I mean, it's that simple. That's previous all-time low. Comp ETH is at least more orderly in its down movement actions. What I'd be watching for here is some sort of bull div into this pivot. This will eventually want to mean revert. Currently that's at 0.22. Previously it took several weeks for this bull div to play out. This is a type of falling 3 drives with a growing bullish divergence that popped up and still got sold down. So again, this is definitely bearish. So I think all the lending and borrowing platforms are here to stay, not going anywhere. I think all the governance token valuations are dubious unless there's some sort of baked in revenue component deeming it a productive asset, although that doesn't seem to really help much at the moment in this fast moving bear market. Metrics are all over the place. We're still trying to figure out if anything means anything, and on-chain stuff is declining, bearish. So there's not really a lot of hope from any of the metrics at this point. Even technicals are looking quite sour. Lastly, I'll mention the ETH-BTC fund and the DeFi portfolio I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool. Currently both in 100% Aave USDC. And you can see all the trades I make through DEXs. You can see AUM, performance, allocation. And I do have the ability to send this stuff to comp, I believe. Most of the time Aave has a better... Oh, I thought I did. Okay, so I don't have comp. No, I do have comp. Just kidding. I do have comp yield capabilities. Anyway, it is connected here through Aave, or through Enzyme. So I do use it occasionally. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.